Hello everybody, this is Books of the Stock Market. How's everyone doing? As for me, everything is pretty fine. It's still hot and busy at work, so not much has changed. Anyways, in this video, we'll be talking about Wyckoff's distribution. I'll first start off by explaining the accumulation and distribution phases. After that, I'll move on to whether Bitcoin is in an accumulation or distribution phase or neither of the two phases. However, if you haven't watched my last video, you probably should go watch that video as a lot of material overlaps into this video. Let's do a quick rundown on the Wyckoff accumulation phase. Phase A of the accumulation phase starts when the downtrend ends. Since it was a downtrend until now, it means that supply outweighed demand. However, as we get towards the preliminary support and the selling climax, we see that supply slowly dwindles. After the selling climax, we see the automatic rally. As mentioned before in the previous video, this is when institutional demand starts to kick in. After that, we see the secondary test happen, and this will not be as drastic as the selling climax as there is less volume during the selling and the spread narrows. However, if the secondary test goes lower than the selling climax, this means that the consolidation phase will last longer or a new low will be made. The lows of the selling climax and the secondary test represent the lower bounds of the trading range, while the automatic rally is the upper bounds of the trading range. Phase B is the consolidation phase. Wyckoff called this phase building a cause, since this is where the big money stacks in anticipation of the new move up. The length of this consolidation can vary, as very long ones take years. There are usually multiple secondary tests during phase B, as well as upthrust type action at the upper bounds of the trading range. When phase B first starts, the volume and volatility may be high. However, as you go further down into the consolidation phase, volume and volatility decreases. In phase C, we see price test the lower boundary a lot, as big money are testing if it's time to go up. A spring can occur when the majority shareholders tank the price to shock the weak hands. If this does occur, this is usually a bear trap, as the big money are getting ready to push the stock upwards and the bears will be left back holding their shorts. If both the spring and several tests of the lower bounds of the trading range are successful, then big money will know it's time to move the stock upwards. You usually see this coming as the stock is constantly testing the lower bounds. In phase D, we should see different patterns such as sign of strength, which signifies the successful test of the lower bound and springs. The LPS, which stands for the last point of support, is another pattern to look out for. As mentioned in the previous video, the last point of support is when the resistance level set by the automatic rally becomes a support level. Usually, if you do not accumulate beforehand, the LPS is a good place to add to your position, as it signifies the stock is strong enough to get above the resistance level and constantly hold it as a newly formed support level. In phase E, we see the stock start to form an uptrend. There may be a few shakeouts here and there, but they're usually very short-lived, as demand is the controlling force. From here, a new trading range can be formed, and once again, this is where big money starts to reaccumulate. This is sometimes referred to as the stepping stone. Now let's look at distribution phases. It's basically the opposite of an accumulation phase with slightly different terms. Phase A starts off with the end of the downtrend. Demand used to be the dominant force, but once it entered the distribution phase, supply slowly became the dominant force. The preliminary supply and the buying climax occur, and this is usually the first sign when the uptrend has ended. After these two events, the automatic reaction happens, and a secondary test of the buying climax occurs. The test of the buying climax usually occurs with lower volume, hence the usual rejection from it. This lower volume is usually called the exhaustion of demand. Once again, the automatic reaction serves as the lower bound of the trading range, while the buying climax represents the upper bound of the trading range. In phase B, we see the big money prepare for the downtrend. They're getting rid of their positions during this consolidation phase. Like phase A, there are multiple bull traps, so you have to be careful and not be caught holding those longs. Throughout this phase, we see signs of weakness, and it's clear that demand is getting exhausted, meaning that supply is constantly increasing. In phase C, we see the last point of supply, where there are a series of short rallies that constantly get rejected by the boundary set by the buying climax or the upthrust if it occurred. This is usually a good place to start a short position, as multiple rejections suggest that price action is really weak to the upside. In phase D, we see multiple last points of supply as the stock can't keep itself up. It may retest the weak horizontal level in the middle of the trading range and then move on to the more important area of the lower bound. Like the test of the upper bounds, the price tries to stay above the support line set by the automatic rally and the sign of weakness if it exists. However, since demand doesn't really exist at this point, we eventually see a break of the support line. In phase E, we see the downtrend start as the stock leaves the trading range. Usually a retest is the sign of weakness level, but it fails as supply is the dominant force now. With the brief review out of the way, let's get into Bitcoin. We see that Bitcoin has been on a downtrend ever since it made that high in May. Since we're on a downtrend and seem to be consolidating for a bit, many people have been suggesting we're in the Wyckoff accumulation phase. We recently passed phase A, since phase A is defined as the end of the downtrend and the start of the accumulation phase. It looks like we had our preliminary support, automatic rally, and our selling climax. The current price action also confirms that we're in phase B, as we have been bouncing in between a trading range. Since there is a trading range, let's try to define those levels. The automatic rally seems to be around the $46,000 mark. We see another resistance level at the $38,000 level. As for our lower bounds, it looks like the secondary test is at the $31,500 level, while the selling climax is at the $33,000 level. This means that we have a trading range of $31,500 at the low end and the $46,000 at the high end. Finally, let's define the preliminary support level, as it usually is the midpoint. To be honest, since all the hallmarks of an accumulation phase are present on Bitcoin, I think that people are right when they say we are in an accumulation phase. So yeah, I'm going to keep a close eye on this chart. Well, that's the end of this video content-wise, but before I end this video, I'm going to do a quick portfolio update. I did not add to this position or anything since last week, so everything is the same. We're trading at the $36,000 level and seem to be interacting with the preliminary support level. Overall, I'm down $227 off this trade. As for Ethereum, this position did not change as well. We're currently trading at the $2,247 level and seem to be consolidating with Bitcoin. I'm only up 268% off this trade, which is a big decrease from before. And finally, here we have Litecoin. As you can see, this is a mirror image of Bitcoin's chart, so there's not much to say about this. I'm down $86 on this trade, and other than that, I have not touched this position as well. With that, I'm going to end this video. If you like this video, press the like button. If you have any questions about this video, leave a comment below. If you want to watch more videos like this, press the subscribe button. This is Books of the Stock Market, and I'll see everyone next week. Thanks.